I'm guessing you guys must have heard about the 21 Capital news so far. It's a new company launched with Jack Mallers as the CEO, and it is quite similar to MSTR Microstrategy or Strategy by Michael Saylor. So, I did some research and trying to compare both. And when I say I did some research, I basically fed data into ChatGPT and summarize that for you. All right, so the first thing I did was um, what would a cynic person say? Right, ask ChatGPT right from their perspective, and I'm gonna read it with you right now. I'm gonna give my comments on it, obviously. So a cynic might say, yet another Bitcoin, but make it a company scheme. They're calling it a purpose-built vehicle, but let's be real, it's a glorified Bitcoin ETF in corporate cosplay. Okay, even if it is that, either it will get the inflow of funds or not, and if it not, it'll die. And if it does, maybe it can play the same rule book that Michael Saylor has set forth, getting cheap debt and buying Bitcoin with it. Maybe not. We're about to find out in near future. SPAC structure with pipe funding. Red flag bingo. I mean, SPACs in recent past have been used for various kind of scams. Mostly, I think that was a 2021 phenomena. SPAC is just a medium of, or mode rather, of raising capital. I suppose it is prone to more scammy characters, because I think there are less controls as compared to either VC route or going IPO traditionally. I'm not an expert, that's what it seems like. But Jack Mallers, to me, doesn't seem like a person who would be running a scam like this. Bitcoin buzzword billionaire, Tether, Bitfinex, SoftBank backing in. That's either a vote of confidence or a who's who of regulatory war zones. I mean, Tether and Bitfinex, you can say, have been controversial in the past, but that's how they made their money. Tether is a highly profitable company currently with only, I don't know, maybe less than 10 employees and billions in profit. And with the current Trump regime, like, regulatory war zone is over. And SoftBank is as mainstream as it gets. So if anything, this is like the lethal combo. SoftBank is basically soft launching in the Bitcoin world through this route. I think this is actually good. We have 42,000 flexing their wallet, not their business. They brag about holding the third largest corporate Bitcoin treasury, not about customers, not about revenue, just coins. All right, I think there is indeed something that is something one should flex. I don't know why that's a negative point. Can they get customers? Will they get customers? I think yes, but we'll find out pretty soon. CEO Jack Mallers, Bitcoin Messiah Complex. Yes, he helped El Salvador go full Bitcoiner, but now he's building the first Bitcoin native public company. Code for Microstrategy, but trendier. Okay, if you don't like Jack Mallers, maybe that's something you shouldn't invest in. To me, I'm not like a fan of Jack Mallers or anything, but he's okay. He's built things. He's generally logical, reasonable person. Everything is about BPS, Bitcoin per share. The KPI is not earning, not customer, not utility. It is Bitcoin per share, because valuation based on memes greater than metrics. Well, it's not really memes. Right? If you believe in Bitcoin, and as I do, Bitcoin per share is a completely reasonable metric to have. I don't know why that's a knock against them. I can see this point being made, like when companies have to come up with parallel metrics to show their growth, like eyeballs, impressions, and not converting to dollar amount. Maybe this point is more relevant there, but they're literally mapping it back to Bitcoin, which is the hardest form of money. So you say Bitcoin per share, Mr. ChatGPT, but it is money. It is money per share. Convertible debt, zero voting rights for Class A share. They'll take your money, give you shares, and you still don't get a say. I don't know how that is any different than buying any sort of other companies. Maybe people can educate me in the comment. Strategic plan, buy Bitcoin, hodl, teach others to hodl. Their business line includes accumulating Bitcoin, producing Bitcoin education, selling structured Bitcoin debt. That I think is a good point. Like, what is their business? Like, they say they're going to do capital operations to gather more Bitcoin, but how? Like, Microstrategy has a constant stream of revenue coming in from an existing business, allowing them to buy more and more Bitcoin. Yes, you can get debt just like Microstrategy, but then where is this operational money coming from? And maybe that's where Jack Mallers' relevant experience comes in. He has built a bunch of Bitcoin companies in recent past. Okay, then I asked ChatGPT, okay, calm down, give me a neutral summary. Okay, launch of 21 Capital, new Bitcoin company, formed via SPAC, Cantor Equity Partner, and you know who's Cantor, right? Cantor Fitzgerald is the company, and Lutnick is the main guy for that company, and he's the main guy for Trump as well. So it's highly aligned with Trump's agenda. Focused entirely on Bitcoin-related investment and advisory. Massive Bitcoin treasury at launch, 42,000. We talked about that. Backed by high-profile names: Tether, Bitfinex, SoftBank. I think SoftBank is the killer name here. SoftBank, I don't think has entered the crypto or Bitcoin field in this capacity at all before. CEO Jack Mallers and institutional strategy led by Jack Mallers, Steve Meehan. I don't know who that is. I have no idea. Investor proposition: pipe investors enter at 1x NAV, aiming to replicate premium to NAV trading seen with other BTC treasury funds with MicroStrategy. I think that is the opportunity here if you can get in at the pipe stage. Clear KPI, Bitcoin per share and Bitcoin rate of return, Bitcoin business lines beyond holding. They want a structured product lending, advisory, education, potentially positioning them as full stack BTC financial company. Regulatory tailwinds and market timing. Timing is, like, I think, great, you know, with Trump being the president and Lutnick his main guy. This timing is perfect. Couldn't be better. So then I said, okay, can you do a comparison of MicroStrategy versus 21 Capital? Okay, so the BTC holding, MicroStrategy has the largest in the world, 506,000. 21 Cap has 42,000. Business model for MicroStrategy is traditional software. 21 Capital is pure play Bitcoin native company. What does pure play mean? I think that's the key word here. Purpose built for BTC. MicroStrategy pivoted to BTC in 2020, and 21 Capital is built from ground up for Bitcoin. Voting structure: dual class, but retail shareholders have same voting power. Class A shares is equal to 0 votes. Control held by insiders. I think that can be a big deal when it comes to any kind of debt restructuring and getting creditors' money back, as we have seen with Genesis, DCG, and things like that. Funding strategy: frequent ATM equity raise in large converts, $5 billion since 2021. And 21 Cap is launching with $585 million via pipe and convert. No operating business revenue. I think that's a big deal. MicroStrategy has an ongoing business revenue. KPI, traditional metrics plus BTC holding. I think it should be traditional plus whatever 21 Capital is reporting. I think Michael Saylor pretty much reports or talked about same sort of metric in past. Operational complexity: diversified operations, but legacy software adds noise. Okay, but it also adds revenue, doesn't it? Debt structure for MicroStrategy: $4.2 billion in convertibles, relatively high leverage. Launch and 21 Cap launching with $385 million convert and $200 million equity. Unclear how leveraged it will get. Oh, it will get leveraged. It will get leveraged pretty fast, pretty high. Public float plus Michael Saylor control for Microstrategy. Tether, Bitfinex, SoftBank. Shareholder dilution, high historical dilution via converts ATM. Pipe offered at 1x NAV, but Class A has no control. So I don't think many people are going to get through the pipe stage. Traditional premium to NAV, 1.8x NAV due to brand liquidity Saylor effect. Launching at 1x NAV for 21 cap aims to gain premium via buzz. I think it will gain premium, and that may be the opportunity to play here. You get in when it launches or converts, rather. I think it's going to convert from CEP to another ticker. So you get in, let the NAV appreciate, and you get out. It may be not tax efficient, but depends on each and every person's perspective. Governance risk, founder led, but shareholders still have rights. Controlled by private players, heavy pipe influence. BTC strategy, maturity, deep experience, proven asset allocation over time. And 21 cap is brand new, untested treasury governance and asset custody dynamics. Also, I think one might add here, MicroStrategy has gone through one bear market, so they know what kind of challenges come during bear market. I think it's a big deal. Okay, why MSTR might be better? Transparency and track record. Public SEC filing, 4 years of audited BTC accumulation. Public market maturity, shares are liquid. Strong institutional adoption and credibility, founder skin in the game. Michael Saylor owns a massive personal stake and has aligned his reputation with MSTR. Why 21 cap raises eyebrows. Control is centralized, no operating revenue. Unproven execution and brand risk. Brand risk can go away. They just need to not do any stupid things, and they will make a brand. Unproven execution. Jack Mallers has some sort of record, I think, in building Bitcoin-related product. I think quite a good record. Operating revenue. That's the thing. I think that's the puzzle they need to solve and report on. How are they going to get more capital outside of getting more debt to buy more BTC? I don't know. And control is centralized. I don't know how they're going to resolve that. I no idea. Why 21 cap could outperform. Clean slate, no legacy ops to untangle, full focus on BTC native metrics. Bitcoin KPI innovation. Well, MicroStrategy can do that overnight if they're not doing it. Capital efficient accumulation, smaller size allow for better gain per BTC acquired. I think that's the opportunity here. You go in before the NAV to premium goes too high up, and then you exit out before it starts reaching MSTR levels of capital to NAV margin, if you will. Verdict, if you had to choose one, conservative would be MSTR. Proven, public, scalable, transparent, and less opaque governance. Speculative bull, 21 cap if you're chasing alpha on NAV multiple expansion or pipe leverage. I think if we're talking next few months, 21 cap. If we are talking next few years, MSTR. And if after a few years 21 cap is still around, and if they're able to show they can gain revenue, sure, do it. They're at parity in that sense. Let's see what Twitter has been saying. Simpler is better. 21 Capital. This is how they're gonna get cash from here to there. To be honest, I couldn't really follow it, and maybe it's lack of my ability to comprehend this. And then Tyler did, it says Jack Mallers and 21 Capital already taking shots at Saylor and strategy. You come at the king, you best not miss. I mean, I don't know. Saylor, I think the existence and the introduction of 21 is a net positive for the Bitcoin ecosystem. And if anything is net positive for the ecosystem, it's good for MSTR and Michael Saylor. I don't think the pool is so small that both of them can't coexist. 21 Capital has a lot to prove. MSTR has already shown resolve to be able to do this. But I think overall, Michael Saylor would, I imagine, this is what he has been promoting and proposing to all different kind of companies. I don't think he would mind this at all. All right. Okay, that's kind of my summary. I'll end it there.